A bold and pragmatic move on part of the RBI governor to go ahead with a 0.5% rate cut at a time when most people were expecting him to deliver only half of that. Hello and welcome to this special show. Over the next half an hour, we will discuss what RBI's rate cut means for you, the consumer, as well as for the economy. I'm Shweta Rajpal-Kohli, and joining me on the show, Dr. Ajit Ranade, well-known economist, also with me here in the Mumbai studio, Abhishek Dwivedi of bankbazaar.com to break it down for you, what it means for consumers, what does it mean for the economy, and of course to talk about what this move means for India Inc., for corporate India, Siddharth Birla, former president of FICCI, and Vikram Singh Mehta, chairman of Brookings India. Thank you all for being with us here on the show. But first up, let's take a look at why Dr. Rajan decided to go ahead and surprise everyone today.
My name is Raghuram Rajan and I do what I do.
And he did what he is best at, surprising markets once again, cutting interest rates by a steep 0.5%. Double of what was expected, taking them to a 4.5-year low. A turbulent global environment and low inflation are the key reasons why the RBI governor decided to go in for a higher than expected rate cut. But it has also allowed him to put pressure on banks to pass on the rate cuts to consumers, something they have failed to do fully so far. Within an hour, Finance Minister held a press conference asking banks to cut rates.
We are looking forward now to the transmission of these cuts, which will effectively help to boost confidence and investment.
And hours later, India's largest lender, government-run State Bank of India, responded to the call, cutting rates by 0.4%.
I think clearly interest rates will come down, base rates will come down, and a large part of the cut will get transmitted.
But the governor believes the entire cut of 1.25% should be passed on. Banks have only passed on about half of that.
The intent here is to start moving quickly on ensuring that transmission does take place. Of course, there are limits to how fast it can happen, but we believe that some will take place very soon.
Banks say they can't cut rates without deposit rates being lowered. And those can only be cut if the government cuts rates on its small savings schemes for ordinary customers. The RBI has done its bit. Now it's up to the banks to add to the festive cheer. In Mumbai, Shweta Rajpal-Kohli, NDTV. All right, let's get a sense of what this rate cut really means for the consumers as well as for India Inc. and the economy. Dr. Ajit Ranade, a perfect booster dose. Some are calling it a Diwali present. How would you describe the surprise rate cut?
The governor managed to surprise the markets yet again. And I think the key word he used is front-loading the stimulus, because he wants a clear visibility of what's coming in the monetary stimulus. And that was something that the market didn't expect. And I think it's a great move today.
All right, Siddharth Birla, you're again someone who's always known to speak your mind, and industry in many ways has been on Dr. Rajan's case to cut rates. Well, it's obvious industry always wants lower rates, but this in many ways has managed to silence India Inc. And Dr. Rajan said, you want it? Here it is. You're going to get a rate cut. Now tell me, what's stopping you from going ahead and investing?
Well, thanks, Shweta. I don't think we were on Dr. Rajan's case. I always maintained that the governor would do the right thing at the right time, which is what he said, that I'm Raghuram Rajan and I do what I do. And so really speaking, this 0.5% has been sort of anticipated or at least waited for a long time. We've knocked on every door possible asking for moderation in costs, particularly finance costs. I think the first thing it will do is to put some kick back into demand. Maybe the dead real estate market, a lot of consumer goods which are dependent on EMIs, hopefully should start moving. And that is the first sign that industry would look at. If their capacity utilizations were to go up, if demand was to pick up, that will open the road to fresh investment, which hopefully should kick in by next year. But more important, I think, is again and again the stress being put that is the whole cost being passed on. the cost savings, are they being passed on to consumers? And definitely there is a gap in what he's already done, 0.75% versus 0.3%. I don't know how long this 0.5% will take to translate. And I think one can understand the asset liability mismatch on a bank's balance sheet. But, we get so many other arguments. Right. Oh, we have NPAs and so on and so forth. I don't think the banks are in a position to be transferring sickness to other parts of the industry. So I think ASAP, they need to also pass on the savings.
That you're making is that the full transmission should take place. That's something that even the governor said today. We heard the finance minister say today. You're not happy with just a partial transmission of rate cuts. The governor has done his bit. It's important now for the banks to do their bit. Let me take forward the discussion because we have, in fact, our reporters across the country standing by with people who have questions to ask all our experts on the panel today. We've got Monideepa Banerjee joining us from Kolkata and Siddharth Ranjan Das joining us from Bhopal. Siddharth, if I could go to you first, go ahead and ask the questions that your guests have. Siddharth, if you can hear me, please go ahead with your questions.
Yes.
Siddharth, if you can hear me, go ahead with the questions.
Well, absolutely. I'm joined by Prashant, a young working executive who has a query. Let us speak to him first. Prashant, what is your question today?
So actually, I just want to know that I'm planning to buy a house in a nearby future, or I can say that in a nearby time. So should I wait cause of this decision, or I can go ahead with my existing plans? So this is my query regarding my new house.
We also have Vinay with us, who's already has a house loan.
Yeah.
Vinay, what is your query?
I just want to know what will be the effect of this reduction on interest, and secondly, how it will affect those who have already taken loan.
So two questions from here in Bhopal. One, Prashant here is wanting to buy a house, and should he wait for a week for rates of the bank home loans to come down further? And the second, from an existing home loan a subscriber who's wanting to know what effect will this rate cut have in his life. Back to you.
All right, Siddharth, let me pose that question to Abhishek Dwivedi of bankbazaar.com. Clearly, the big question in everyone's mind is people who are fence sitters who are really wondering whether it's the right time to go ahead and buy a house, take a home loan. Do you think this is the perfect time, or are we going to see further slashing of rates? And what about existing borrowers?
So this definitely will impact the borrowers who are existing as well. And if you see that, immediately SBI responded with 0.4% cut. So what this means that the people who are giving 9.75 at that point of time, they have to pay only 9.35. Right. So anyone who is there on a floating rate, this will impact everyone. So this will help existing borrowers as well as the ones who are coming to the market right now.
A lot of times what we see happen, Abhishek, is that even though banks cut their base rates, they make very good offers. The festive season is coming up. We can expect banks to, have competitive pricing, home loan rates coming down, but they don't bring it down for existing borrowers. Now, is that something that the RBI has talked about in the past, and that's something they should do? Shouldn't customers approach their banks and say, you know what, the base rate has come down, bring down my EMI now?
So there are two ways to do that. One is definitely the customers should represent the case and go to the existing lenders to say that, hey, the base rate has come down, so I want my rate to go down as well. Now, essentially, this is a kind of a negotiation which happens with the customer and the bank. If the bank is not agreeing, the good thing is that if a customer is on a floating rate, he can always close and transfer a loan to some other lender. Right. In that case, for the other lender, this will be a new loan, and they'll be more than happy to give at the much lower rate that point of time.
And now, as per the new rules, there is absolutely no transfer charges that you need to pay to switch from one lender to the other. So the message really for all those home borrowers out there, and Siddharth, you could convey that to your guests as well, is that go ahead with the best rate available in the market. As you heard Abhishek tell you, if it was 9.75 earlier, you could expect 9.35 now. So if you're a new borrower, try and get the best rate available. If you're an existing borrower, make sure that your bank is lowering your EMI. If they are not, feel free to switch to another bank. Let me now go across to Monideepa Banerjee in Kolkata with her questions. Monideepa, over to you.
Shweta, I'm with the Millennium Mams, two of them on my right, Shirisha and Sunanda, and they say that I should ask the first question of this gentleman who founded Millennium Mams, the group of women who take a phenomenal interest in the economy. So, Mr. Vishnu, let me start with you first and shoot your question.
My question is to Mr. Ranade. Sir, Governor Rajan mentioned about food inflation under control in spite of the two drought-like years. And he looks comfortable with the inflation number. What is your take on it?
Okay, food inflation is one question. Next to you, Sunanda.
So my question actually was after the RBI policy, Mr. Patel had spoken of GDP rates touching 8% in 2007 and inflation just being at 4%. And this seems to be a huge contradiction, but however, he said because of excess capacity in the economy, he doesn't see inflation catching up. So what is your take on it? Because this seems too good a situation and I hope it happens, but what was your take on it?
Okay, that's a tough one. Shrisha, your question.
Yeah, mine is on the favorite word that is going around called transmission. Now we can understand that because of the NTPC bond rates and the small saving rates being very high, the transmission is not happening to the customers. So do you think the government will bite the bullet and bring the savings rate to the market rate and to enable transmission effectively?
Okay, 3 questions from there. Shweta.
All right, Monideepa, we'll take the first question on food inflation. Dr. Ranade, a very important question there, given the fact that, yes, the RBI governor today actually credited the government for fantastic management, despite the fact that we've had 2 successive monsoons, 14% below normal monsoon, but yet we've managed in a way that food prices aren't all that high. At the same time, Dr. Ranade, he has mentioned that inflation expectations continue to remain in double digits, and that's the kind of mismatch that one always sees. You know, when you tell people that we're actually in a disinflation scenario, prices aren't rising, whether it's housewives or anybody managing a simple household, they find it hard to believe. They say we still continue to pay a lot more for our vegetables, for our pulses, for a lot many more goods. Explain to us why there is such a sharp difference between what the statistics are showing and what's happening on the ground.
Well, Shweta, as you know, the trend is more important, the direction of movement. So if you look at the trend of CPI, that is Consumer Price Index based inflation, which is what the RBI is tracking now, since November 2014, so for the last almost 10 months, it's actually coming down, and the August number, which is the latest number that we have, is the lowest it has been in the last 10 months. Secondly, what happens is in food inflation, sometimes the prices of onions and so on tend to get disproportionate attention because they're very seasonal and they shoot up, they spike up a lot, and you soon have situations of distressed sale of onions. So if you leave aside the onion effect, overall, if you take the food movement of wheat and rice and staples, it's actually been on a moderating trend. That's not to say that it can't go further below. Look at the global situation of food price index in general. That's also on a moderating trend. Of course, we have to be worried about the fact that monsoon is almost 14% deficient as we speak even today. Right. So that is a risk that has been highlighted by the governor. But as I said, this is a calculated decision because it's front-loading a stimulus at the same time being cautionary about the food prices. The other question was about excess capacity. Right. So we have a situation where a lot of private and public sector industries have excess capacity. So we will have, it is possible to have higher growth without putting inflationary pressures because of higher utilization of excess capacity. So I think that's the hope that going ahead we will be able to inch up the growth without causing undue inflationary pressures in the economy.
All right, and the other big question that was asked from our guest in Kolkata on transmission, we're going to actually slip into a quick break and come back on the other side to answer that very critical question. Why are banks not able to transmit the entire rate cut to consumers like you and me? That's coming up in just a bit.